Happy Friday, traders. It is Friday, the 13th of August, 2021. This is episode number 2051 today. Let me turn down my news feeds here. Lots of chatter. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Yet another day of mixed pre-market posture. Yet again, we have the indices hovering around unchanged, up 10 basis points, 20 basis points, and so on and so forth, leaning on the risk-on side, but not quite ticking across on average. The average up on these 11 indices that I'm tracking is around 0.1%. So still mixed. We've had 5 out of 5 days in a mixed posture so far, and that's where that stands. So another day where we start at all-time highs or near all-time highs, not giving up the all-time high area. The Nasdaq remains relatively weaker than the S&P. So does the Russell, with the Dow Industrials as well as the S&P kind of leading. This morning, not much in terms of earnings, nothing major coming in this morning. And then as far as event risk, there's more and more news coming out on the Delta variant. Japan just released some concerns from their health department about the speed with which the variant is spreading. Some issues here in the U.S. with the school systems and so on and so forth. So this is going to be a key thing for quite some time, it seems. On deck today, this morning, we did have the import and export prices in the U.S. We had balance of trade out of the Eurozone. The Eurozone balance trade came in very strong, 18.1 billion versus the prior 12.3, in line with forecast. And the export and import prices came in mixed. Export prices year on year 17.2 versus 16.7 expected. Import prices 10.2 versus 10.6 expected. What's left for today? Michigan consumer sentiment prelim. This is the one that's a mover for August. Expecting the consensus is 81.2, forecast 81.5. That's at 10 o'clock Eastern. And then that pretty much wraps up the day. We do have this FDI year on year. I have to be honest with you, I have no clue what this is. Out of China, there's no time attached. And that brings us into the weekend. So that's where we are. The S&P is currently at 95,000 contracts for the session, rounded up, and completely balanced, with a relatively tight range at 8.75. The point of control is yet again higher, 44.58, with the overnight inventory completely balanced in terms of volume, completely balanced there, plus 2%. And that's where we stand. That's the comprehensive view of the pre-market summary. Here's what was expected yesterday. The primary scenario is looking for a minor pullback and a push higher. No idea where it would go, but one of the key targets was 44.50 for yesterday. Secondary scenario, no pullback, immediate, and then just squeeze into 44.50. Both of these happened in yesterday's session. Here's what actually took place. Let's clean this up a little bit in our review segment. So what do we have today? Yesterday, we opened in range against the prior point of control. We pulled back and pushed to 44.30 and a quarter, with the prior low at 44.30, right? So we have somewhat of a double bottom here, and then the market immediately, the buyers immediately responded. We saw another excellent example of a short squeeze at 44.30. The day before that was also an excellent order flow example of a short squeeze and then the market turns back up, pushes back to the open, and from there it's just squeezing into 44.50 right in here. Minor zipper there, and then it continues on to the measured move at 44.55.50. The high is 56.25. Yesterday, completely unbalanced, a trend type profile with the point of control near highs. So for the overnight session, we expect that the market will push higher. Why? Because the auction is incomplete to the upside. We ended up finishing with a weak high, point of control near the top. That's the fuel that would be needed for the overnight session to continue to discover higher and find those sellers who've gone underground, I guess. And as long as it cannot find sellers, it'll continue higher and higher and higher. Currently, the market's trading at 44.59 with an overnight high at 44.59.75. So that was correct. Yesterday's rally had pretty good delta. You could see things moving in the same direction. Coming into today's session, we open up, we go sideways. We open up, we go sideways into the Asian session, and then as Europe opens, we get a little more volatility, a little more volume, and we push away from the lower distribution, squeeze into the high that was put in overnight, but we have not relinquished that area. Again, the point of control 44.58 and the VWAP and mid are just below us. We're coming in today with a relatively bullish posture into new all-time highs. This thing is just not done. It is boring coming in here and repeating the same thing every day, day after day. So that's where we stand. Here's the composite 4 days into the week here, and we pretty much are one time framing up, and up, and up, and up, and it's boring. It's great for your stock portfolio, your retirement account, your IRA, your 401k, whatever, your pension. It's great for that. Not so great for day trading. Okay, so that's where we stand. I'm going to dive, actually, I'm not going to dive right into what's expected for today, because today is Friday, and it's the Friday where we ask you where you're located. So check this out. Let us know. Where you're located. What is your city, state / province and country? Type in your Twitter handle while you're doing that. If you have a Twitter account, this helps people connect. Putting in your location is just fine if you don't want to connect, but if you put in your Twitter handle, it allows other people to find you. Twitter, Instagram, whatever you want, public social media. Do not post your emails. Do not post your phone numbers. Look around you. Is there someone nearby? It's worth it to connect, even if it's virtual, to connect someone nearby. Hopefully you can find someone nearby trading in the same time frame, trading similar or the same product that you can connect with and have an accountability partner or someone who is who you can talk trading with. Traders are unique and a unique breed, and you need someone who understands trading to be able to connect. It's not something you talk to your significant other, spouse, whatever about and go as far. So my goal here is to connect, to have traders converge and meet each other. And we do this by posting the city, state, country, and your Twitter handle or social media handle that you feel comfortable being reached out at. And that's what I'm looking for here. So let's dive into today's expectations, and I'm sure you can pretty much guess what the expectation for today is likely to be. More of the same. Pullback, rally, pullback, rally. We've become conditioned to buy the dip. Here we are at the overnight point of control, expecting a potential push here into the 55. The old measured move, yesterday's high, the overnight, the full session VWAP, full session mid, all in this area. If it holds this area, we're likely to squeeze into that 64.50 area, consolidate, and finish with some selling into the weekend. That's scenario one. Scenario two is a condition where we do not hold. So scenario two pushes higher, looking for the overnight high stat to be taken out, come back to the open, get back into the 55, 56, and then give that up to start testing the areas below. The next is the singles at 50. This is the mid-century figure here. This will be 50, 50 right here, before we find much firmer support in the 45, 43 area. So this is the 45, 45. It's not easy typing with this thing. 43 area before we bounce back up into the close. Okay? Those are the two conditions. You probably noticed that the market doesn't rally very well off the open lately. It tests down first, and I'm expecting more of the same. So again, above, looking for 65, and below, looking for 55, 56, 56, 50, 45, 43. 55, 56, 50, 45 to 53. Below that, we're back at the 33 prior high and 30 double bottom. That's an important area to test, the 30. And that ends the one-time framing up. Not expecting that to happen today. There's just no catalyst, right? The Fed is being dovish. They're saying the taper plan is going to be put together in September. Taper maybe late next year, maybe mid next year. It's too far off of the market to care. And that's where we stand today. It's really not, the market's not needing to price anything in that is dramatic, okay? Again, I invite you to put in where you're from, city, state, and country, and your social media handle, Twitter, or whatever, if you wish to be contacted by those nearby. Of course, you're at the liberty of giving away, posting your social media handle, and then ignoring messages that you don't wish to respond to. Please don't post emails or phone numbers. Those will be edited out. And then finally, I want to remind you that next Wednesday, we're going to have the wonderful Kelly Farrell. She's going to be joining me on Wednesday at 4:30 p.m. Eastern U.S. time to talk about what it's like to execute in the market or to trade the market from a fund perspective. This is what we'll be discussing, things like how do you put together a plan, how do you manage your positions, how do you put on positions, how do you deal with lack of liquidity, and so on and so forth. This is a look at what we call the OTF, or the other time frame, the bigger money in the markets. Okay, please sign up. You can find it at go2ct.pro/fund-manager. It's also on my Twitter feed. I look forward to catching you in there. Good luck. It is Friday the 13th. I'm not a superstitious person. I couldn't care less that it's Friday the 13th, but if you are, maybe you shouldn't trade because you're coming in with that mindset. Good luck today, and I'll catch you on Monday morning, nice and rested. Take care.